Hi, my name is Kevin Retcher. I'm the owner of First Meridian Mortgage. Today, what I want to go over is closing cost and what's normal on a 20% down mortgage purchase. Okay, so what we're looking at here is a old closing cost sheet. If you can see that, it is if you've bought a house in the past before they changed the documents, it looks like the old good faith estimate. Nowadays, the legal document is called a loan estimate. Okay, so if you're calling around, it's not wrong if a loan officer doesn't want to issue you a loan estimate right away. That requires a full loan application and registering a loan, locking a loan, and doing all the numbers. And then it's a legal loan application also. So most loan officers, it's not illegal. They give you a similar document that'll be a closing estimate of some type. There's different formats. The keys are that you understand what the fees are, and that's kind of what I'm going to go over with you today. So on this particular closing loan estimate here, what you're looking at, and I'm going to try to make this just a little bit larger for you so that you can see this. The most lenders have a underwriting fee, a admin fee, a processing fee, and or both. They normally range between 700 to like 1150 these days. If someone says I don't have any lender fees, they've essentially rolled that into the interest rate. So you then have to worry about checking interest rates and cost, both. So it doesn't mean one lender is worse or better than the other. You have to compare the interest rate and cost. Okay, loan officers only really have control over the points, the underwriting fee, and appraisal, and if there's a flood and a tax service. Outside of that, majority of these fees on here, we do not have control over. Okay, a lot of people think we do. So loan officers can make their estimates look better by not including some of these items. I include all the inspections so that you understand what a full picture would cost on buying a home. So let's go down the order. You got the admin fee, in this case, 1110. Appraisal fee, 525. Self-explanatory. Credit report fee, 150. Credit reports range between $87 and about 140. You might have supplements depending on if any are needed. Tax service fee and flood. Make sure your house isn't in a flood zone every year. Make sure the taxes have been paid. Work number. Work number is if your employer sends their payroll data off to the work number, we can go there to get verification of employment. What's important there is how often they do it. If they do it every week or every pay period, then it's up to date. That's good. If there's a lag time, sometimes we could still have to get employment information from someone at HR or a supervisor. Next is the title abstract or the search. They make sure that they know exactly who owns and who has title or lien against the property. Next to home inspection and radon. Those are optional items. If you don't do them, they come off. Average cost on home inspection around $550, and radon is usually about $150 to $200. Radon is checking to make sure there isn't gases coming up from the ground that could cause cancer. Next fees are settlement company fee, cost to do the settlement, typically range between $495 and is up to $1,000 just for that one fee. A lot of people don't shop their title companies. They go with whomever the realtor recommends. It's very easy to shop title company. Google their names. Most of them have a calculator right on their website. Punch in the address, loan amount, purchase price, gives you what their fees are. It's that simple. It's really about 10 seconds to get to compare. Lender's title insurance and owner's title insurance. Those are some of the more expensive items at your closing. The lenders protects the lender for the life of the loan. If you refinance, you have to get another lender's policy on the next deal. They are trying to change some of those rules, and they're in some cases allowing lawyer letters in some states. Virginia has not gotten there yet, but expect some of these fees to get consolidated or come down. Owner's title insurance is the only thing that protects your equity in the property. The lender requires them to have protection, so you should absolutely have your own protection also. Okay. Next one, home warranty, optional item. You don't have to do it. If you can get the seller to pay for it, not a bad thing, but it's just like any other warranty or insurance. If you go and call them because your water heater broke, pay a $100 deductible to come out and repair it and or replace it. Got to look at the fine print of those home warranties. They average between $500 and $800. Some people keep them on a yearly basis and use it as their like maintenance protection. ICL, insured closing letter, that protects all the money in the transaction. So if the settlement company was to go belly up, that money is protected. Recording deed and mortgage, the cost to record the instruments at the courthouse. City and state recordation taxes in Virginia, and every state's different, but in Virginia it's $3.34 per thousand, $2.50 to the state, a third goes to the county. So that is those items. Survey ranges between $400 and $500. If you have acreage, it could be more. Also costs more if you want stakes. Some people would like the perimeter staked. Generally, I'm not a big fan of spending the money on that unless I really need to know. Most of the time, a survey is not required. It's an optional item. But if you have a fence, it's probably a good idea to make sure there's no encroachments and that things are all situated appropriately. Pest inspection, $150. They range between $49 and $150. That's kind of self-explanatory. So if you go down, next section is prepaid items. Prepaid items is like a savings account, establishes money in an account to cover items that are not one-time transactional cost in conjunction with getting the loan. So think of your interest in as a timeline in a 30 days in a month. Closed on the 12th. This was done as if you closed on the 12th, you'd owe 18 days to the end of the month. Interest is paid in arrears on the mortgage itself. So once you pay to the end of the month, you get to live in that property for the next 30 days. And then when you make that payment, you're actually paying the previous month's interest. So if you were to make a June payment, you're really paying all of May's interest. So keep that in mind. So at closing, you got to catch that up to the end of the month. That's 18 days of interest in this scenario. Next is the homeowner's insurance policy. You are required to give us a 1-year paid policy at the time of closing on a purchase. That is so that a year later, they just renew that 1-year policy. Since the lenders are allowed a 2-month cushion, it is a government mandated program. They put the dates of the insurance due dates and the tax due dates into this computer program, and it's going to spit out how much money that they're allowed to actually have. On the insurance, you're not going to make a payment for 1 month because of that lag time in payments, so you're really making 11 payments before the bill is due. That's why you're going to collect 3 months at closing so that they have the 14th and the cushion of that 2 months. Similar is there is no mortgage insurance on this deal, so there'd be 0 there. 6 months tax bill collected at closing. Keep in mind, this doesn't show any seller credits for the days that they own. So this would be, you're going to be the tax holder or the person that is required to make the payments when the bill's due. So you're going to collect 6 into that escrow. You're probably going to get a prorated amount of days on the seller side that covers that, brings it down to about 3. Make 2 payments. They have their 2-month cushion of 8 when the time is due. All those monies add up to be $7,098 on this particular deal. And in this situation, we go over to the right side, purchase price $500,000. Closing costs from the left side add up to be $17,109.34, and your total's $517,109.34 in this scenario. If they had a $400,000 loan, putting 20% down, they would then owe at closing $117,109. Now, keep in mind, on this particular estimate, the proposed payment is down below in this particular scenario. Now, when it comes to actually once you lock the loan, you're going to get what's called a loan estimate. A loan estimate is going to have a little bit different information formatted differently. Still got the $400,000 loan, got the interest rate here. It breaks out the principal and interest in this section, and then escrows down below. In this particular case, the homeowners insurance, the HOA was $100, and so that's where the variance between the $965 and $865 is for total cost on the home. Okay, here's where they bring all those fees. The $17,485, they bring that to the front, and the estimated cash to close. They break out all these documents or all these fees into certain categories. A is origination costs. So box A is the only one that we really have control over. And like I said, in some cases, you might see 0 there. If they've zeroed out the lender fees, then the interest rate most likely is higher, but your cash to close would be lower. So if you think you're going to refi shortly, it might not be a bad deal to not pay the $11.10 in the admin fee and take a higher rate. Okay. Next are items you can't shop for. Section B, credit report, appraisal, flood tax, work number. You have no control over whether or not we have to do those or not in conjunction with your deal. Those are a normal tolerance scenario. Box C, depending on who you use for your title company, if they are recommended to you and they use those fees, there's a 10% tolerance, so they can't go up or down accordingly. These inspections in box C, the home inspection, home warranty, pest, radon survey, most lenders will put those actually over into box H, which are items which are optional for you. It just depends on how the computer programs work, but most these first 5 are normally in box H. It doesn't really matter either way if they're in C or in H. So all those numbers, box D is just the addition of A, B, and C. You can see that right there on the A, B, and C line there. Go over to box E. Box E has a 0 tolerance. If the number is higher than at closing, then these numbers, the lender or loan officer might have to pay the difference in those scenarios. That's typically why we'll ask for the contract before we give you a loan estimate, to make sure that there's nothing in the contract that would say buyer's paying the grantor's tax, which might normally be paid by a seller, but you negotiated something different. So if you did negotiate anything different, do your loan officer a favor and let them know that those changes are different. Box F and G is that same as that lower left escrow and prepaids. And again, box at H is where they put the owners and then other optional items. One of the key things that you have to keep in mind also on the loan estimate is in box J right here, where it says lender credits. When I was talking earlier about interest rates and what we have control over, the other item that we do have control over is also if there's any lender credits. So in some cases, you need to double check if in fact there are any lender credits in box J, which one reduces your cost, but also goes against any potential points that may be on a loan. An example there might be a scenario where someone would have a lender credit of, let's say, 3,000 in the lender credit and 3,000 in points. That would be a net zero to you. And I'll show you that by putting those two different scenarios on a page also. But in the end, if you have points and you have a credit, you would just subtract the two to find out what your net is. So it's very important. Like I said, in some cases, in box A, when they may try to disclose 0 points and 0 admin or underwriting fee, you do need to look at the lender credits versus those numbers in box A and also what that final interest rate is. All those add up into box J and then come over to the front. Things to pay attention to. Someone tells you they're locked. In this situation, I have this marked as no. If you're locked, you want to make sure that you are checking that it says yes if you think that you're locked, and then the date that it expires. It will have those dates right here, okay? The other thing to keep in mind on page 3, there are a few items. We used to have APR, used to be a whole page by itself. APR to me shouldn't be that important. I check it, but normally they've reduced it down to a one line item in this scenario, 5.88. There weren't any points on this deal. The interest rate was 5.875. So those are pretty close in their number. They have a couple new items here. What's your the cost over a 5-year period, and how much principal you have paid off in 5 years. Speaking to that, if you can afford it, apply an extra $100 or an extra few $100 every month. If it's coming electronically out of your account and you can afford to pay for it, that'll speed up the amortization on the loan and you'll pay your loan off quicker. The total interest percentage is a new calculation. It's the amount that you would pay in interest as a percentage of your loan amount. So in this case, on a $500,000 loan, that means if it's over 100%, you're going to pay over $500,000 in interest over that life of the loan. So if you can make those principal payments, it'll reduce that number greatly, but there's really nothing you can do to control that number other than pay it off quicker, okay? Then you'd have whether loan's assumable, late payments, and if the person intends to service the loan. So in general, that is the closing cost on a conventional loan that was with 20% down. Those are the typical fees that you'd have. Some other things that could pop up would be, a well and septic if it was wasn't on local sewer. If you needed any other type of inspections based upon something unique with the house that you might be buying. So if you have any questions on any of these closing cost items, or you can shoot me an email, comment in the comment section down below. My name is Kevin Retcher. I'm the owner of First Meridian Mortgage. This was your loan estimate breakdown on a 20% down conventional financing loan. My name is Kevin Retcher, 703-799-5626. I look forward to working with you. To all the Marines out there, Semper Fi. Talk to you soon.